So know your customer, know your business. These are typically associated with banks and financial institutions, regulatory requirements around lending. If you're a traditional, again, bank or financial institution, Bank Secrecy Act, Anti-Money Laundering Act. Again, what do they have to do with our businesses? Why would I ever, go through this activity? Well, it's exactly what Steve touched on in the beginning of this. It's getting to know your client, getting to know the intimacies of who's involved, who are the parties that you're transacting with. Your KYC process can be as broad and wide as what you want it to be, or it can be skinny down just to where you feel comfortable, in which you know the parties, you know the transaction details, you know some of those types of information that you should be collecting. I believe we have some samples of what they are on one of these next slides here, Steve. So controls, they should match your organization's risk tolerance, your thresholds. We've talked about training. I'm going to emphasize that all day long for you and for your business. Training is not an event. It is continual training and continual education. We see more sophistication daily in fraud and fraud attempts. And so we're going to double down on that topic. And go ahead, next slide, Steve. So just some examples of what some type of customer due diligence or knowing your customer may look like. Driver's license, physical address versus a PO box. Steve talked about, phone numbers. Do these phone numbers match? Have you done a Secretary of State search and know that they're in good standing? Perhaps beneficial ownership information or articles of incorporation. All of those things, W-9 information, doing a W-9 match, all of those are tools and opportunities without going too far outside of the data and information that you're already requesting from these folks when you're doing your underwriting process, to also go through and do a nice KYC and get more familiar with that entity, get more familiar with the customer, not only your customer who's your borrower, but also the customer's clients that they're working with, and getting some information around them in the event that you're remitting payment to them versus perhaps remitting payment directly to your borrower.